This requires a special ability to look into it and govern through the market. This is the moment for you to change. This is the moment for you to look into a diversified sector where there is 0% risk altogether. There's a 0% risk in terms of that particular business who's going to do a great amount of job for you. Every time, sit back, think, understand where is that mistake happening? Why is that mistake happening? What is that it's going wrong? Good morning and welcome to the second session in Unit 5 in Management of Banking and Financial Services, where we are talking about the management of risk. Now, nobody wants to go and take risk exclusively, but then you cannot avoid it. So you need to manage risk. So let's see, how can you manage risk? Starting with the insurance risk management, assessment and quantification of likelihood and financial impact of events that we are talking about may occur in any part of the world, and this requires a special ability to look into it and govern through the market. Now, a year back, nobody could have even thought about such a worst pandemic that could ever come into our lives and destroy the entire business, destroy the entire lifestyle altogether. But then, when it has come and when things have gone wrong, now it is a lesson for us, lesson for every single company across the world, including the insurance company, that what is going to happen in case when these kind of things are going to happen in future. So management of risk becomes even more important rather than just managing the outward thought of how an insurance will going to cover you. So what I'm trying to say here is that every single business has to go through a lot of identification. It has to go through a step-by-step micro-level assessment of understanding where is the risk, what is the ability to take the risk, what are all the steps we need to take in order to break that risk and minimize the loss altogether. Now, for example, if you look into even sporting events these days, like IPL or an Olympics, or when you talk about a FIFA World Cup, even there is risk involved. Anything might happen to the players, or there might be a fire break, or there might be a terrorist attack, or there might be a sudden natural disaster. So every part of the business is experiencing uncertainty, and that's where the risk management becomes a very, very interesting topic altogether. Now, you cannot quantify risk through numbers, or probably you will not be able to quantify risk just by using some tools or some mathematics. But how will you be able to quantify risk is only through the assessment, evaluation of each and every parameter, trying to understand whether this is happening or not. Insurance risk management, we first have to talk about this word called as value. Now, alignment of the pricing market strategy and reinsurance arrangements to the organization, which is trying to profile your risk appetite as well as the optimistic goals of the organization. How can you add value to your business is a very, very important factor. The one way of adding value to your business is by doing business better, is by improving your techniques, your strategy of business. But then this is not everything when you talk about the business. There are many other factors. The other factor which I would like to talk about is minimizing the risk of the business. So if a business is there on this earth where there is 0% risk altogether, there's a 0% risk in terms of that particular business, then I would be more than happy to invest there. I want to really go and invest in a business where there is no risk at all. Why? Because that business, even if it does not make profit, but will definitely add value to the company, to the shareholders. So that is why I always say that the governance of risk is more important rather than just looking into the profits. Many a times companies forget this matter, they forget this ideology altogether that risk has to be managed, risk has to be governed. On the other hand, they just go forward and take up the risk, and at the end of the day, when the risk comes into a deep picture, when it comes into reality, they are not able to focus, they are not able to return back profits. Now, for example, when you look into the banking and financial sector across the world, most of the banks have gone ahead and promised way beyond that they can take it or way beyond they can deliver. Now, what is happening is that when they land up into the risk of NPA, non-performing assets, or when they land up into the risk where they are not able to get back to normalcy, when they are not able to get back to the situation of any thought process altogether, then automatically they are into deep trouble. They are into a serious issue altogether. So that is why I would always say that risk is something that has to be avoided. Now, moment you think that you can take an extra step and run a business, but that extra step is going to cost your entire business, we are going to land into serious problems, into serious issues altogether. So I would always say the insurance risk management is a great ideology. It's a great system through which you will be able to understand the pros and cons of your business and then plan accordingly. So that is very, very important. Followed by enhance the feedback mechanism for any business. Why? Because you need to understand what your business is trying to talk to you. You might think that you are delivering the business, but then what is the process? What is the profitability? What is the movement of the business has to be understood very, very clear. There are many times when business takes things into confidence. The organization assumes that yes, we are doing well. Yes, we are ahead of the competition. There is nobody to beat us. There is nobody to challenge us in the market. But then there is a signal that has been coming to you at some point of time saying that this is the moment for you to change. This is the moment for you to look into a diversified sector. Try to move away from the sector. Try to get into better shape as soon as possible. But if the organization ignores that signal, automatically you are at loss. You don't want to continue further. You just go further and you make a loss and you just land up into trouble. This is why I always say that enhance the feedback mechanism, because the feedback tells you exactly where we are making mistake, why this mistake is coming into picture, what are all we have done all together in terms of making this particular activity done. So every time, sit back, think, understand where is that mistake happening, why is that mistake happening, what is that it's going wrong, is it only about the profitability, it's only about the drive, is it only about products and sales? No. It is all about understanding the risk feedback. It's all about understanding where things are changing accordingly. Next thing, assist the clients to reorganize the risk and events that are needed so that you understand risk better and you are able to make them understand, analyze more towards a market responsive business, more towards a better pricing, a better methodology or a system in place that will make you to reduce the losses. Now let me tell you this one. Sometime back, when you started looking into companies like Walmart, they understood that the way to grow a business in retail is not just about having a fancy pricing. It is all about understanding the consumer better and giving him a better accessibility altogether. Today, what has happened is that when you look into the world of retailing, people think that retailing is all about sales. It is all about pushing the products out of the shelves. But the reality is that it is not just about pushing the products out of the shelf. It is all about understanding how to make that shelf life come back. How to make a better pricing, a valuable pricing, so that every customer who walks into your shop understands the nature, the importance of the business and buys the things that is good for him, that is better for him. So that is where you would try to make a capital loss reduction. You would try to make the business leaner, meaner, more effective in terms of reaching the consumer. So that is needed here. Followed by the risk framework. A good risk framework should have a strong governance structure and a board and a management who tries to understand. That's why appointing a chief risk officer for risk management in the organization culture is highly appreciable, and he is the person who is going to do a great amount of job for you. Let me tell you this very, very clearly. If you look into organizations like IT companies, or if you look into companies like which are dealing with banking and financial services, or a mutual fund company, or if you look into healthcare or any other sector for that matter, the governance of risk is more something from a person who understands the inherent nature of that business. It is not that a CRO is a fancy decision or a fancy designation altogether, I would say. The CRO is going to be a person who inherently understands the business clearly. He knows what is the factor, what are all the wise decisions that we need to take so that we can avoid risk into the business. It is not going to be something where he's just going to nod his head in order to impress the management, in order to make better profits in the business. It is more about making people understand why this risk needs to be avoided, how the business can be made even more effective. So when you look into the role of a CRO, the first thing is called as the enterprise risk management. The second thing is called as the view of key risk controls that he needs to take, ensuring common risk languages across the organization, and managing the risk through the risk dashboard. So if you look at it, he has to first understand the entire enterprise risk management. What are all the risks that flows across the organization? It is not just about one sector or one parameter altogether. The second thing is that view the key risk controls where we need to put in a check altogether, where we need to have a control measure so that the risk can be minimized altogether. Following which, ensuring common risk. Everybody in the organization should understand the consequences of risk. So he needs to translate it in such a language, in such a manner that every single employee understands the importance of risk and they try to minimize the risk factor. Second thing is that managing the risk through a risk dashboard. So you have a dashboard, you have a key parameter that tells you how you need to go further and reduce the risk. So that is what it matters a lot. So this is how I have told you in the risk assessment process. You need to again and see what is the documentation, what is the procedure that is involved, followed by the enterprise risk management. An individual can avoid the risk of an automobile accident, of any kind of accidents or anything, provided you have the knowledge that you don't want to take the risk, you don't want to land up into any kind of problem. But if you are into a negligent driving, if you are into a situation which will lead into trouble, then automatically you are going to be taken by the risk factors. Now, the risk analysis is very, very important, where I try to say that ensure that every company has a right framework. They need to have a right kind of decision. There is sufficient management buy-in and company has approved it with the right quality and the right quantity. That's very, very important. The quality factor and the quantity factor, both of them have to match. Why? Because if you try to compromise on either of the factors, then things are not going to work. So the management needs to have a right buy-in. They need to understand, yes, the process that we have taken is correct and we have to go with it. There is a process of rigor assessment. You cannot take things lightly. Each and every time you need to make a check. You need to go through again and again, make a rigorous task assessment and see whether things are going correctly. All key risks are understood and analyzed. So whatever key factors that we are talking about, it has been understood and it has been analyzed so that at the given rate, things are far better. Then, with this, we come to the end of the session. I hope and believe that the session was of a great interest and of a great resource to you. In the upcoming sessions, we will be understanding more about the risk and its ventures in terms of insurance and in terms of organization. Until then, stay tuned, stay blessed, and stay enlightened forever. Thank you once again for joining me today on this wonderful session.